We start with a look at the U.S. economy after revision to the U.S. GDP figures showed that the economy did not grow as fast as expected in the first quarter. Rachelle Akuffo explains why the government budget cuts earlier this year could spell trouble for businesses and consumers by this fall.
Like a budding flower, America's recovery is taking root in key sectors, with house prices and consumer spending continuing to rise.
I am feeling confident. I think the indicators are certainly pointing in the right direction.
Thursday's gross domestic product, or GDP, figures were not quite as sunny. GDP measures the sum value of all goods and services produced by a nation in a defined period of time, usually a year. In the first quarter of 2013, U.S. GDP grew by 2.4%, falling short of forecasts by 0.1%, but still a marked improvement over the previous quarter. The economy is holding up relatively well, but government spending cuts continue to be a dark cloud over growth, one that some economists fear could cause problems later in the year. Some analysts say the 5% cut in federal spending that took effect in March put a bigger drag on the economy than predicted. Delays in implementing some of the cuts means consumers and businesses won't feel their full impact until fall. This could stall hiring at a time when high unemployment continues to concern the U.S. Federal Reserve and the White House.
There are still too many people who are looking for work who have not found work. There are still too many huge, unfilled, unmet needs when it comes to rebuilding our infrastructure.
There was a silver lining for U.S. markets, which reacted positively to the GDP data. The mixed data could dissuade the Federal Reserve from tapering off its monthly $85 billion bond buying program, which has kept U.S. lending rates down. Rachelle Akuffo, CCTV, Washington.